A very happy good morning to you. Welcome to Market Sunrise, your go-to briefing for everything that matters before the opening bell. Before we dive in, remember nothing here is financial advice. But buckle up, because we've got a CPI surprise, a record close, and a monster earnings miss all in one morning. Let's kick things off with the top U.S. headlines driving the tape this morning. June's CPI report just came in ice cold. Inflation cooled sharply to 3.5% year-over-year versus the 3.8% Wall Street expected, with prices actually falling 0.4% month-over-month, the biggest disinflationary print in months. The S&P 500 closed at a fresh all-time record of 7,543.59 in the prior session, tacking on 0.4% as that cooling inflation data fueled a broad rally. The Nasdaq led the charge yesterday, closing up 0.9% at 26,107.01, powered by a sharp rebound in semiconductor names that had been under pressure. But this morning, the mood has shifted. S&P futures are down 0.3%, and Dow futures are pointing to roughly a 500-point drop at the open, as traders digest the record run. Fed rate hike odds are in free fall after that CPI print. The probability of a July hike has tumbled to just 17% from 42%. A dramatic repricing that's reshaping the entire rate curve. Continuing with more breaking U.S. news you need to know. IBM is getting absolutely hammered in the pre-market, cratering roughly 22% after reporting Q2 revenue of $17.2 billion, a significant miss against the $17.86 billion estimate that's sparking the stock's worst sell-off in years. Now let's check the market's mood. The VIX, Wall Street's fear gauge, fell to a calm 16.50, down nearly 4% into yesterday's record close. Yet CNN's Fear and Greed Index sits at 44 in fear territory, telling us this is a market that's outwardly calm, but not yet greedy, leaving plenty of room to wobble if those oil and hawkish Fed headwinds intensify. Let's move to deals and catalysts, the big corporate moves shaping today's action. Citigroup is unleashing a massive $30 billion share buyback alongside a 12% dividend hike, signaling serious confidence in its balance sheet, even as earnings season heats up. ASML continues to flex its monopoly power, raising its full-year outlook yet again, while announcing roughly €12 billion in buybacks and a 17% dividend increase. The chip equipment giant just keeps delivering. Now here's what Wall Street's analysts are saying, and not all of it is bullish. KeyBank is going against the grain on Apple, cutting the stock to underweight from sector weight with a $250 price target, a notably bearish call on the world's most valuable company. HSBC is piling onto IBM's pain, downgrading the stock to reduce from hold and slashing its price target from $231 all the way down to $191 in the wake of that ugly revenue miss. Let's go global. Here's what happened overnight around the world. South Korea's Kospi absolutely exploded overnight, surging more than 6% to 7,284, as semiconductor stocks caught fire on that cool U.S. inflation read and hopes of easier monetary policy. On the other side of the ledger, China's Q2 GDP came in at 4.3% year-over-year, missing the 4.5% estimate and raising fresh questions about whether Beijing's stimulus measures are gaining enough traction. Time for the earnings scoreboard, and it's a blockbuster morning from the big banks. Goldman Sachs crushed it with earnings per share of $20.98, absolutely demolishing the $14.54 estimate on revenue of $20.34 billion, sending shares up roughly 6%. A monster quarter from the trading powerhouse. JP Morgan delivered another beat with adjusted EPS of $6.14, topping the $5.85 on $58 billion in revenue. Though shares dipped slightly in pre-market this morning after initially rallying about 2% on the results. Citigroup beat on both lines with EPS of $3.15 versus the $2.73 estimate on $24.8 billion in revenue. But the stock is still trading down about 4% in a classic sell the news reaction, despite those strong numbers. Let's check in on commodities, energy, metals, and the inflation-sensitive trades. Crude oil is surging this morning, with WTI jumping 2.9% to $79.57 a barrel, off yesterday's close of $78.14, driven by fresh supply concerns around the Strait of Hormuz that are partially offsetting the disinflationary CPI signal. Natural gas is the outlier, with Henry Hub slipping 0.6% to $2.88 as mild summer weather forecasts keep a lid on cooling demand. Gold is having a big day, with spot prices surging roughly 2% to around $4,085 an ounce, while silver is up nearly 3% to $59.12, both catching a bid from falling rate expectations and a softer dollar. Here are the names leading the charge higher in pre-market trading. And on the flip side, these are the names feeling the most pain this morning. Now, let's look ahead. Here's what's on the radar that could move your money in the days ahead. Today is packed. We've got June PPI data, the Fed's Beige Book, and Fed Governor Warsh testifying, all of which could either confirm or complicate the soft landing story that CPI just told us. Mark your calendars for July 29th. The FOMC decision lands with expectations now tilted toward a hawkish hold, and any surprise language could jolt this market in either direction. The Iran Strait of Hormuz situation remains an ongoing wildcard, with any escalation threatening to send crude even higher and undercut the inflation progress we just celebrated. Tomorrow brings June retail sales, a critical consumer health check that will tell us whether the American shopper is still spending or starting to pull back under the weight of higher prices. And looming on the horizon, the August 1st country tariff deadline could reshape trade flows and inject fresh uncertainty into an already complex macro picture. More key dates to keep on your radar as we look further out. Mark next Wednesday, July 22nd, after the close. Tesla and Alphabet both report, and those two megacap names alone could set the tone for the entire second half of earnings season. Here's where I think this all comes together. Stocks are coming in off record highs, but futures are soft this morning. And here's the tension. That cooler June CPI is a genuine tailwind for the bulls. But you've got a fresh oil spike, hawkish Fed commentary, and classic sell-the-news reactions to strong bank earnings, all pulling the open lower. I'd expect the software up, semiconductor down rotation, and the IBM shock to drive real dispersion today, meaning the index-level moves could mask some very big single-stock swings underneath the surface. With PPI, retail sales, and megacap earnings still ahead this week, today looks like a consolidation session where the inflation versus oil tug-of-war sets the tone. Let's wrap with a quick look at the top movers in crypto. Crypto is riding the exact same soft CPI risk-on impulse that's lifting gold this morning, with higher beta Ethereum leading Bitcoin toward that roughly $65,000 resistance level it struggled to crack. The tape looks constructive short-term on friendly stablecoin policy signals, but let's be honest, This is a rebound inside a broader year-over-year drawdown. And those idiosyncratic altcoin spikes like Zcash are one-off stories, not a market-wide bull leg. The big question is whether Bitcoin can hold above resistance if this equity sell the news mood spills over into risk assets more broadly. If this briefing helped you walk into today sharper and more prepared, smash that subscribe button, drop your boldest market take in the comments, and ring the bell so you never miss a morning. This community gets better every single day because of you. And as always, everything you just heard is for education and entertainment only, not financial advice. Do your own research, talk to a licensed professional, and if you haven't already, subscribe so we can do this again tomorrow morning.